please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, a difficult market, and we will come back to it with our technical experts in just a bit. But it's also earnings season, and when we talk of difficult earnings, we should also talk of strong sets of numbers. Parag Milk posted a good set of numbers. Revenue growth and margin expansion was impressive. Of course, the PAT, the profit after tax, didn't rise much. That was because of a high tax outgo. Denvendra Saha, Chairman, Parag Milk Foods, joins us now. Good morning, Mr. Shah. Thanks much. If you can just take us through the nuances of the year that was. It's a fairly decent fourth quarter performance of 21% on revenue and 42% rise at the EBITDA level. This 55 crore, is that a pace you can maintain in terms of EBITDA?
Yeah, absolutely. This is one of the historical quarter in our company. And this journey continues growing on because we are doing the very hard work, and we are ready with all infrastructure, all investment, all expansion into the infrastructure, sales, and into the market. And we expand our professional team. We hire the team also. Sure. It's helped me to our very hard journey towards the FMCG.
Sure. Mr. Shah, good morning. What the street has really liked is that you've introduced new variants in your high-value products, you know, protein powder, ghee, even mishti doi, etc. How much do you think all of this could add to your revenue profile over the next couple of quarters?
Yeah, that's why I'm giving the good guidance for the next 2-3 years journey, because we are adding this completely new segment, the sports and nutrition, the product Avatar brand, and it's giving you the good feel from the market. It's just last 3-4 months before we launch. Okay. And this market itself around 1500 to 1800 crore market. And in next 3 years, we are reach around 160 crore to 180 crores. Okay. Share around in the sports nutrition product for the Avatar particular brand.
Okay. Yeah. So what about the margins?
With the Denon North India's expansion.
Are they better? Are the margins better in the sports nutrition business?
Yeah, but it's a very high, good margins in this business sports nutrition, because today itself we are paying the duty and all these things very highly compared to the international product. We are giving the better product with the best margins, but these margins we are using to expand our cheese business, because cheese and whey is the combination of this business. Okay. And it's take the,
Can you get to this 160 crore size of your sports foods without too much advertising? Would not your ad expenses go up?
No, we add this is a different route channel totally. This is mostly sports nutrition shops are there. It's influenced by trainers, influenced by the gyms and all these things. And basically we spend on money more and more into the digital and social media.
Okay. Yeah. So so now that you spoke about, the sports business, you spoke about how you'll do with whey, etc. Overall, for the full year, what kind of growth can you see in terms of a percentage growth for both the revenues as well as profits?
Yeah, absolutely. With this sports nutrition business, as well as, we just done the infrastructure for the protein first time into the country. This is again one more product we are for the mass protein. India is a 80% protein deficiency, and we are coming with the sports with the mass protein powders for the mass nutrition. Yeah, Protein Plus is our new brand. Go Protein Plus. Okay. And this market is again around 1600 to 1800 crore. Yeah, and this is the pure milk protein concentrate. Sure. Others, all pharma companies and other also, they are not pure the milk protein. And protein, number one source is the milk protein. Yeah.
Okay, so just a final question.
Business is around 3,000 to 3,500 crore business.
Okay, just a final question on what is your capacity utilization and what is the capital capacity expansion plans?
Yeah. Our expansion plan and capacity utilization, almost we are utilizing, expanding in the cheese facility, in the whey facilities, and recently we added the paneer facility, and we take over the Denon plant into the Delhi. Okay. Around with this capacity utilization, around 80% we are using. Denon is just, we are starting in another couple of the month or 1.5 month. Okay. Yeah, with this capacity and expanded capacity is around 26 lakhs per day, and we are really constantly working create wealth for all stakeholders, and I hope to achieve to true FMCG valuation metric to it.
Okay, all right, Mr. Shah, all the best. And of course, health nutrition is the way to go. So all the best with your new foray into that. But let's move on. Lupin, India's second largest drug maker, on Tuesday posted a net loss of 783 crores in the fourth quarter due to a one-time impairment provision on certain intangible assets related to the Gavis acquisition in the US. Archana Shukla caught up with the management to get more details on pricing pressure and the the weak guidance. They did talk about further pressures in terms of growth, etc. Let's listen in to what they had to say.
We are not in that state of, kind of disarray. I mean, even today our EBITDA margin is 21.5%, okay? Right. Which obviously from our own standards is not as great as we would love it to, but I don't think one has to be apologetic about it. At the same time, our gross margins are at 66.1%, despite having a lower salience of our brand portfolio in the US. At one time it used to be 25, 28%, today it's barely 10%.
But would you be able to maintain your EBITDA margins around that 21% level for FY19?
Of course.
What sort of more cost rationalizations would FY19 have for Lupin?
In the last year in particular on R&D, we really optimized it, so we cut down on some of the drug discovery spend that we were doing. We got external funding as well. And if you've seen in the last quarter, it's basically down to 10% of sales. And this is the level that we expect it to be, at least for the next 1 year. On the cost base itself, I think we've always done lots of projects. We've never done one big comprehensive project across Lupin. That actually is what we're actually undertaking starting tomorrow, actually, where we will kick off a holistic global project for the company, looking at every cost that there is, and clearly this is the year to tighten the belt, and this is the year to optimize to get the best out. So that's what we're just embarking on.
We would see you moving out of certain markets,
we do want to take that one-time scan. I don't think we're going to do anything as a knee-jerk reaction, but I think you have to be cognizant. If the US starts going to a place where complex generics make sense, not regular generics, then do you spend the same amount on R&D? Do you still have the same number of R&D people? If Japan goes into deep price cuts, do you still build on that? Do you build on specialty? So I think these are the questions that we're seeking to answer. And then we want to look at the entire organization footprint.
Well, we have to focus on market now because 305 points down now on the Bank Nifty, 81 point down on the Nifty. First pullback has been sold into, and how? And the mid-cap index is now approaching a 1% decline. 1:4.5 on advanced to decline lines. Ashwini Gujrar is back with us. Ashwini, this is turning a bit ugly now, especially on the Bank Nifty. Your thoughts on the last round of fall?
See, maybe Karnataka election was holding up the market. Yeah. Now that's out of the way, and the way the speed at which we are moving. If anybody was long, say yesterday morning, that guy is really trapped. And once the market moves with this sort of momentum, the intention is to trap people. So my sense is that this will accelerate, and today banking could have a 500-600 point type downside, because in the first hour it's rare to see 300 point falls, and stocks like ICICI Bank are now down 3.7%. So this is really serious, and big selling which is beginning to happen. Also, it now appears that the second top of the year has been made, because this is how markets move from significant tops and bottoms. So that way, I think mid cap, large cap, everything falls now, and probably financials lead the market lower.
So are you saying that people with long positions should book out now, book their loss? And what would be a fresh position recommendation, even short at these levels?
I would think so, because something that's gone up, 3,500, 4,000 points, this is not falling just to stop 50 points lower. If that was the case, 10,750 should have been held on. This is a top where the market is now going to price in all the negatives, bond yield, crude, global bond yield, everything else. So we may actually underperform the globe because we had outperformed for a while. So right now, loss, profit, if you are long, take that off.
You know what, Lata, what was that day we were referring to? Event-based reversals, March 4th, when we had positive event, perceived positive event and a rally before that. And for many days we've been talking about all the macro negatives, right? Something will trigger, and then the market will take cognizance of that. That I think is what's taken place. And as we discussed in the morning, I think the Bank Nifty was vulnerable for a 1,000-point decline. We've almost got from the high yesterday more than 500 points actually.
Absolutely. Ashwini, I just wanted to come back to that point you were making about the global cues. You think the sell-off that we are seeing is largely global related, or is it more to do with the domestic factors?
See, we were being held up by this election. Now that election is out of the way, we are going to catch up with all our negatives, because of which we should have underperformed, but we didn't, because we had an election to deal with. So now I think we should underperform global markets like our rupee is doing, and obviously the markets will also catch on, and all the bond yield, etc. Financials will take a beating from here.
Okay. Any other specific short calls? You spoke about the market, of course. The Nifty is a short. Any levels and any other stocks?
See, on levels, I think now 10,600, 620 thereabout should be the level on the Nifty. But given the momentum, I think more and more people will now start losing money even in the large caps. And that's what happens in a narrow market. Now people are going to get dragged out of their hiding places also. So consumer, FMCG, and as I said in the morning, even IT is not really outperforming. So individual stocks, I think PSU banks have started a fresh leg of downside, and this will be the place where towels are thrown in. So Bank of India is a sell with a stop of 96, target of 90. Bank of Baroda is a sell with a stop of 140, target of 128. And Indian Bank is a sell with a stop of 306, target of 290.
Absolutely. If you needed any confirmation about the weakness in terms of PSU banking earnings, you got that from PNB, and that soured the sentiment across the board. But we have Mitesh Thakkar and Sandeep Wagle who also join into our conversation. So let's get some quick thoughts from them. Mitesh, what would you do on the index now? Is a fresh shorting position recommended at this 10,700 level?
I think we just took a shot, I think, around 15 minutes back when the index kind of decisively broke below the 10,750 zone. So around 10,730, 725, in case you get a 10-15 point kind of a pullback, would be good levels to go short. Keep a stop about 10,765, and I think 10,630, 640 zones, which is close to the 20-day average area, could be tested. So you have a good risk-reward equation of about 1:2.5. On the stock side, I have a couple of sell calls. Bank of India features in my list as well. Keep a stop at 97, look for targets of 88. And Grasim on the intraday chart is breaking down. So that's a short with a stop at 1,092 for targets of 1,050.
Okay. Well, I just wanted to point out, Reuters is referring to Capital Economics, an important think tank, saying that they don't see India's trade deficit balloon too much because commodity imports should be in check. They expect India's trade deficit to remain comfortable over the coming months, despite the problems of trade tensions or crude price increase. Well, that's positive. I really want to make the point that in all this gloom, the trade numbers were good. They were indicating recovery of exports. But that at the moment is the market's not in a mood for positives. Well, Sandeep Wagle is also with us. Good morning, Sandeep. What are you trading?
Good morning, Lata. I would go with a buy in a KPIT, stop loss of 258, target of 270, and a sell in a Bank of Baroda, stop loss 138, target 132.
Okay, well, lots of stocks hitting fresh lows now. REC, Federal Bank stocks at 52-week low. IDFC Bank has made a fresh 52-week low. Capital First, of course, they move in tandem now because of that merger process. Canpin Homes at 52-week low. So a lot of these stocks. And just see the intraday chart of Tata Motors. That will tell you the problem with this market.
Even Jet Airways. I mean, Jet Airways is at a new 52-week low. How quickly that stock has, reversed. I mean, it's halved, I think, over the last 3-4 months.
Exactly. It's those earnings didn't come through, and after that there was this big decline that's taken place.
I just wanted to ask Ashwini, isn't ICICI Bank at a 200-day moving average level? Is that big? I mean, any trade there?
Well, it depends on how you get to your 200-day moving average. In fact, it's broken today with a 4% decline. So I think, that becomes irrelevant. Possibly you'll get back towards 270, 280 because the overall headwinds on the banking sector are way too huge. Plus, the negatives just come to the fore once the market mood is sour. 15 days back, we wanted only look at positives. Now, for a while, market will only look at the negatives.
Well, yes, a lot of stocks. In fact, a couple of stocks still holding in the greens. Something like Suzlon, where we're talking to the management, but that's also coming off the highest point as there's no follow through on that one. A couple of others which are moving to low point right now. Berger Paints, the stronger NBFCs as well, like Bajaj Finserv. Granules is a stock which has been continuously making 52-week lows. That's also down. L&T Fin, Manappuram, your 914 call was Canpin Homes, Ashwini, but anything else in the financials where you think shorts can be taken?
Basically, take on any NBFC. Like last year, you picked up any NBFC, it started to make money. Now, people who are hiding in NBFCs, they are going to, face the heat because wherever there are profits, the market will get a hit because whatever was positive for NBFCs last year is now negative. So I would think all sorts of mid-cap type NBFCs, even Bajaj Finance, will start to give back gains.
Yeah, and a strong fellow like HDFC will fall less, that's all. But I guess the tidal wave of the industry cannot be escaped. Gentlemen, thank you very much for your 10 a.m. trades, and today looks like we'll need your advice oftener than normal. This is a very difficult market, especially if you have long positions, bullish positions. Well, with that, let's shift focus back to earnings season. And today there are two important nifty companies announcing numbers, ITC and Tata Steel. Mangalam and Nigel are standing up to give us the key expectations. Well, Mangalam, you go first, the more difficult stock, ITC.
Absolutely, the more difficult stock, and in the FMCG rally, ITC hasn't really participated. So in terms of valuations, it trades at what, 26, 27 times 1 year forward earnings as against the sector, which trades upwards of 40. Whether earnings come by or not, otherwise, it could very well be a value trap. So a couple of things that we're working with. For ITC, the cigarette business, which accounts for 50% of their revenue and more than 90% of their operational income, we're expecting a 2 to 3% volume decline in the cigarettes business. This would be the third consecutive quarter of volume decline. However, the decline has been arrested from 7% to 4% to now 2 to 3% is what the street is expecting. More than the cigarette business, this time I'll also be watching out for the remaining 10% of their operational profits. That is the hotels business, FMCG, others, as well as the paper business, because these industries have been doing fairly well and the management has a big thrust on the FMCG others business. So watch out for the total numbers. Total income growth of 3%. EBITDA will grow by 8.5%. Margins likely to improve by about 200 basis points. Primarily on account of improved realizations in cigarettes and lower losses in the other businesses. And a net profit growth of 8% is something that the street is watching out for. For ITC, remember, segments cigarette revenue will not be comparable year on year. So keep an eye out on the cigarette EBIT. A 7 to 8% growth in the cigarette EBIT would perhaps mean that the volumes have declined 2 to 3%. Again, there is no hard and fast scientific data for cigarette volumes. These are just estimates. So I give you a thumb rule. 7 to 8% growth in the cigarette business EBIT year on year would mean 2 to 3% decline.
All right, always good, right, if people smoke less, but unfortunately not good for ITC.
Shareholders.
And the shareholders. Nigel, what about you? How's Tata Steel expected to do today?
Well, Tata Steel's numbers are really going to be driven by the realizations. If you take a look at the basic consolidated numbers that are polled throughout, top line more or less flattish, operating profit, there'll be a bit of a degrowth there, and in fact, margin should see some compression. The net profit we're working with is around 2,000 crores odd, but that's where all the unimportant numbers do end. For Tata Steel, you're looking at it on a geographic basis. So Indian operation. We already have the volumes numbers with us, so there has been a bit of a degrowth because the Kalinganagar operations were shut for some part of the quarter. That was already known. What's going to drive their numbers really is the higher steel prices, also the focus on value-added products. That's going to play out. And for Tata Steel, remember, they get some part of their raw material requirement from captive sources. So the iron ore requirement is totally from captive sources, and coking coal, nearly around 40% of the requirement comes in from captive sources. The basic number you're looking at is EBITDA per ton of around 15,000 rupees on a per ton basis. Shifting focus to Europe then, the EBITDA per ton over there we're working with is around $75 on a per ton basis. Remember, same quarter last year, it was a blowout quarter. At that point of time, they delivered an EBITDA per ton number of more than $100. On a sequential basis, though it looked better, at around $75 from around $40 on a per ton basis. Remember, steel prices have moved higher, though raw material costs as well have moved up. Southeast Asia, the profitability should be more or less stable. We already have the sales volumes numbers. That is at around 600,000 odd. So 15,000 rupees per ton for Indian operations. Europe EBITDA per ton, $75 per ton. Key important numbers.
Got that.
6 p.m. today is the timing.
Okay, so 3 numbers to watch. $15,000 per ton, $75 per ton, 6 p.m. today. Yeah. Got that. But don't go away, Nigel, very quickly, Bhushan Steel is up 4% today. And its value is... market cap is 569 crores. But isn't the Tata Steel NCLT plan telling us that the market cap ought not to be 569 crores? Just if you can remember the math mentally, tell us.
Yeah, that's right, Lata. Remember the stock though has lost 65% in this year itself. So some part of that news was really playing out. Today it appears it's more or less a trading move. Why? Because last night at around 9 p.m., we've got the details from Tata Steel. They are saying that in fact they're going to take 72% stake in Bhushan Steel at a consideration of around 160 crores. That would mean that 100% would be valued at around 220 crores. Remember, the remaining 27% stake will be held by the banks as well as the existing shareholders. And as you said, Lata, the current market cap of Bhushan Steel is more than 550 crores. All of that is going to get compressed in less than 60 crores. So actually, the stock should correct from here because, in fact, the dilution is going to be so large. Also, keep your eye out because the press release suggests that at some point of time, Tata Steel will convert close to 9,000 crores, or they have that option of debt into equity. Short point, Bhushan Steel share capital is going to get expanded totally. In fact, it's all going to get compressed in around that 60 crores. So at some point of time, the street will take note of this. Today, it appears it's more or less a trading move.
Okay, thanks a lot for that. So those are all the stocks in focus today. Of course, we also have to talk about commodities because there's been pressure once again on crude. Manisha Gupta joins in now. Manisha, once again, 78 plus on crude?
Well, yes, we have seen 79 plus as well yesterday. So from those kind of levels, it's off highs. But if you look at a month-on-month basis, week-on-week basis, we still are trading on the higher side. The pressure that you are seeing in the commodity price right now comes in, one, from the strength in US dollar, which is trading at a 5-month highs. You have the US Treasury yields as well trading above 3%. And then especially for the crude oil, it is also about the spot crude prices and the futures crude prices. And there's a huge divergence in that, which the market is sitting and taking note of, as we have seen various fundamentals actually being factored into the prices. Add to that the fact that the US inventories also have seen a rise by 4.9 million barrels, and that seems to be pulling the prices down. Also, the fact is that there's a lot of backlog on cargo in Asia and Europe, and you also have pipeline bottlenecks being reported from West Texas, Canada, etc. So when it comes to the physical market, there are many concerns. There still is higher supplies there, and that perhaps is finding its way in prices. The gold and silver has seen sharp declines overnight, and we seem to be holding on those lower side of the range. For the gold prices, we saw 1288 on the lower side. It already has seen 1.5% decline in the New York session yesterday. Another 0.25% down is what we have seen the markets open up with today. Silver, we did try holding around that 40,000, even 41,000 for a brief time, but back below those levels. So pressure continues for that sector. It is also a struggling day that has begun for the base metal prices. It is all under pressure, as you can see. We have seen the strength in US dollar continue to weigh on this space. It also is about the demand, which is quite erratic when it comes to this quarter for construction, and that seems to be weighing on as well. So copper prices have seen increase in inventories. Because of that, we have seen a slide there. Almost everything, starting from steel, iron ore, nickel, all of that is trading flat to negative on the Shanghai, on LME and the Indian markets as well. But a quick trading call is what we have from Kenya Commodities, and they choose to be in currency space where they expect the currency to continue to depreciate. For first month futures, they are expecting the rupee to decline up to 68.32 in the day today.